All right, traders, good afternoon. This is Christian from Tribeca Trade Group, and this is your Wednesday, August 31st, end of month recap. All right. So obviously end of day recap as well. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. So I will say this, congratulations if you've been trading through this year. Right. We are now through 8 months of the year. They've been a very challenging first 8 months of the year. We only have 4 months to go. Right, September, October, November, December. And we are coming upon, which you've heard me say in these videos over and over, a very difficult seasonal month of September. If you haven't heard it in my videos, I'm sure at this point you probably, if you've been active in the market, have probably heard somebody talk about how it's September and mid-year or midterm year election, which are often pretty weak. So keep in mind, that is just one of the factors out there, right? We always use everything else that's going on in our analysis. But the other thing too, besides September being a rough month, is thinking about what comes next after September, which is October, November, December. Those are strong seasonal months in terms of midterm year election years. So keep that in mind. Again, you still have to wait for confirmation and for signals, especially if you're a trend trader like myself. But you want to have some of these things in the back of your mind. So first things first, let's look at where we finished for the month. Here is the performance for the month. SPY was down 4%, Qs were down 5%, mid caps down 3%, and small caps actually outperformed the other indices. Still down for the month, but down 2% for the month. And this was a crazy, this was a crazy month. Like I said, in terms of, my professional trading, and I've been a retail trader for now a number of years. This is the hardest, so far the hardest year that I've had to trade, as a retail trader. In my trading career, the hardest time that I've seen was 2007 and 2008. And back then you weren't just worried about, where the market was going to turn and go higher. You were worried about your job back then, right? That was your number one concern. I worked at Bank of America Merrill Lynch. At the time it was Merrill Lynch. And I think there was 6 or 7 rounds of layoffs. You heard, that this bank was going under. You didn't know from, there was a couple months there. Every weekend you were worried about whether or not you would be basically coming back or not. So it's just completely, in terms of concern, things were just different. Not to say that they can't get worse and go down that path, but the market bottoming was the last thing that was on your mind at that point. You just had bigger concerns. All right. So for me, that was the most challenging time, to be in this market, and challenging time, in my career. But in any event, let's get back and focus on what's going on, because I think that there's some interesting signals. Now, first of all, right, we know that we've been in like a bearish crossover with NYSE and NASI. Right. In terms of breadth, right. That's something that we've been posting quite frequently. Right. So if you want to look at this, this is something that you've heard me talk about quite a bit. Right. This is what and I think I posted this yesterday. Right. This is the McClellan summation index, looking at advancers versus decliners. Right. This is where we crossed over. Right. In the middle of June, we had a crossover, and then we're kind of reconfirming it in here. And there was the swing, right, which went along with the price action, right? More advancers versus decliners. That's exactly what we wanted to see, out of the rally that we saw. Now, at this point, we've continued to kind of move down since the price action got rejected at the 200-day moving average. Right then and thereafter, we lost the 5-period moving average, and the price has been under, except for last Thursday, where you saw price get back above the 5-period moving average. Sometimes you see that one-day fake out. That was a fake out. Next day was Jackson Hole. And since then, we've been heading down and below all the other moving averages, including the 50-day. So now I would normally say, hey, we've got some support right here, 39.54. But this is the last day of August. We're going to be on to September. So this is the value area, and we will be opening up below value. So a couple other things to kind of look at, right? So number one, before we get to some of these interesting things that I want to bring up, as far as my risk taking goes, I'm extremely light right now, right? I have a couple times over the last week have had to unwind some positions. It is what it is. We talked about in yesterday's videos, right? This year has been a tumultuous year. And you really want to make sure that you don't have any big losers, right? There's 4 types of trades out there, right? There's the small winner, the big winner, the small loser, and the big loser, right? And in this market, you could have the first 3, but the fourth is going to make it very difficult for you to be a profitable trader, considering that it's very difficult to get the first 2 that I mentioned, the small winner and the big winner. So you have to keep that in mind. All right. And this is how my year's been going on. I will send a P&L video out to members later this evening, but it's the first, now that we're at the end of the month, I don't really talk about P&L too much during the middle of the month because it can change. But this is the first time that I'm back above, that I'm positive for the year. And this took a while to achieve. I started the year down 19%. I've only had 1 negative month since then, but it's been one of those situations where it's been a battle every month to make sure that, just basically winning 1 month at a time, forgetting about how I started the year. And I figured if I just keep at it, and stay with my game, play the game correctly, follow my system, I would get to positive at some point back in, probably the second half of this year, which is true, right? It took me to August to basically get me positive for the year after a horrible start. Again, I've only had 1 negative month since then, so I'm outperforming, up 3.3% for August. Given where the S&P finished, I'll take it, right? This wasn't the best, in terms of my performance was a little bit higher a couple of weeks ago, but I really didn't give much back. If you've been watching my videos, all along this month, that I basically said, hey, I'm getting much more defensive as the price slipped below the 5-period moving average. All right. So on and so forth. Again, I'll send out a full video talking about the winners and the losers to members later this evening. All right, so I just wanted to sum that up, right? And here's my trading for the day. Right, you could see, I had a couple day trades. The only thing I kept on was the CEG, and then I've got an SPX call spread, which I'm taking a short-term shot at something, which I'm going to get to in just a second. And also, I'm in some LNG too. Sorry about that, but that's basically it. I don't really have any other major big positions on right now. I'm sticking to what the price action is telling me and being very defensive until I get some confirmation that at least the price gets back above the 5-period moving average, as a little bit of confirmation, right? Some of the other moving averages would help as well. All right, so I want to get to a couple other things that showed up on my radar today. Right, so I talked about the NYSE and the NASI. A couple other things that I do glance at every now and then is what's called the NIMO and the NAMO. Right, this is the McClellan oscillator. Right, so it kind of really looks at extremes. We are pretty much this oscillator is basically saying that we're at a pretty extreme level at this point. Notice the last time that we got extreme, which was down in June. I'll overlay a chart of S&P in just a second. Also, this is for the NASDAQ. Notice what this level is, right? It's pretty extreme, right? So when we use this with an S&P chart, I think I've got that in here someplace, somewhere. You can see I sent out audio files out during the day. So here we go. So same thing. Here's a chart with the S&P. Now you've got the McClellan oscillator here in the bottom, right? Notice the level that we're at. Notice the level where we were in June. Notice what ensued. Now, it doesn't have to be a move like this. This was a pretty dramatic move, and there was a lot of other things taking place here. But at the very least, we're pretty damn oversold. And you could look at other situations, other occasions where we've gotten to this level on the McClellan oscillator, right? Here's December, right? We had a move here, right? So again, it's good to look at multiple occasions of this. You could see in the We got another one of these readings at the end of January. Now, did this change the overall trend? No, but it gave you a pretty nice bounce to the upside. All right. So every time we've been down here, we've seen some sort of bounce. Right. So again, I wouldn't get fixated on this type of move. I would just say, hey, we're probably going to get some type of oversold bounce at some point. Whether that's tomorrow, I don't know. I don't make predictions. Whether it's Friday, it could be Friday, considering that we've got a big jobs report, right? If that jobs report comes in negative, bad news might be good news, considering Mr. Powell said that he wanted to see pain. All right. So just something to kind of keep in mind, right? If depending on what your time frame is and how you're trading things. A couple other things that I thought needed to be taken out to the downside. Right. We have the 1 hour VPOC down here. All right. So for me, once I see some of these things taken out, like I had a couple short positions into today, I covered the short positions, right? I just think when you're looking at the overall market, right? Of course, I'm always going to look at the direction and the what the price action and the trend is doing, but you want to be aware when the risk reward doesn't really set up for going long or going short. In my opinion, it's not a great place to start shorting here after this magnitude of the move. We're probably due for some type of positive move. We haven't really had any positive news recently, so you want to be aware of that, right? So 1 hour VPOC being taken out, this is something that I thought that needed to happen. Of course, there's going to be another one lower down here, but we don't have one for a while. Same thing with SPY, right? This was taken out today, right? Basically, right around the downside, the low of today, right? So the SPY was a little bit lower because they're different volume profile. Right, NASDAQ also, that was taken out yesterday, right? And we're coming in and we're retesting that. So if we really break below, the 12,300 level, it's actually the 300 level in the Qs, then that kind of, we might have more downside, but we've got some levels to watch and so forth. All right, so I thought, considering all of that, I put on an SPX spread for the end of the week. Right, here it is, right? I am risking some money by doing that, but every trade has some money that you risk, right? 450 to make, possible, 1550 on the trade, looking for a plus 1.2% move, basically from here. So again, taking a shot on something, that's how it's going to be. Taking a couple shots on some things, but not really risking all that much money, given the direction of the trend and that we don't really have any confirmation. So I think very interesting to see how this is going to play out the next couple of days. I think that we get some type of a bounce, but I can't tell you exactly when that's going to be. But that's what some of the selling pressure has done. I also thought that this was very interesting too. Walter Deemer, great follower on Twitter, was talking about the 1962 market and how he traded with it. Wow, congratulations. Very cool. Interesting. I brought up this chart of the S&P. Kind of look a little bit familiar to you, right? Here's your move down, right? Move back up. Now, again, just like I don't like to overlay other time frames, I would be very careful about doing this. It's one thing that could possibly play out. Of course, another thing that could play out is that we take out the lows and we go much lower than that. But notice how you had some type of a retest in here, and then up we went. Right. This is when the S&P was down at 55. All right. So keep that in mind. All right. Try to stay fresh. Right. I will reiterate again that this month is a very weak month. At some point it can turn around. Maybe that's with the CPI report that comes out in the middle of the month, and then of course we have the Fed meeting on September 21st. What I would do is this as well. This is the last thing I'll say in this video, is that just like I had for the month of August, be realistic with your goals. One of the things that I said, right, I kind of planned out my month. I achieved my goal. I think it was like the second to the third week. And I had said in the trading room, I said, guys, I'm at my goal for the month. I'm being conservative for the rest of the way out, right? Because I didn't think it was going to get easier as we went towards the end of the month. So, have your goals, figure out what you're trying to do before you start. Being that it's the worst seasonal month, maybe that will sway your thinking about like your risk taking, right, this month. Okay. And survive in advance, right? I think September is one of those months that once we start September, the goal will be getting out of September and having a positive month, right? I think that's basically what I'm just, looking for. What I'm looking to achieve is outperform the S&P, just like I did by about 7% this in August. I would like to do the same. But at the very least, I would like to be positive for the month. All right, guys, that's it for today's video. Again, give yourself a pat on the back, right? Have a cold drink, go out for a run, go out for a walk, get some exercise in, right? Because this has been a very difficult year overall to trade. A lot of people, it is what it is. A lot of people have blown out their accounts this year, right? If you're still hanging in there and surviving in a tough environment, again, give yourself a pat on the back. Have a great night, everybody. See you tomorrow.